Okay, I'd like to call to order the Montgomery County Industrial Development Agency Audit Committee. Under new business, we have our annual audits, so we will turn the floor over to Amy to discuss the annual independent audit.
So everybody should have in front of them two documents for the IDA audit, which is the audit of financial statements and the investment statements as well. I'll start off by saying the IDA audit went very well this year. Sheila gives us everything we need, very timely. Working with Sheila and Ken and Mike when I came out in the field, it went very well, very smoothly. Sheila gave us pretty much everything well in advance of us coming out. We were able to work on things before coming out and just being out here for a day for the field work. So everything went very efficiently. And you'll see from the lack of a management letter, there are no comments for improvements or efficiencies. All the controls are operating well. All our testing came through, all clean. So you'll see that without a management letter and as well as the clean opinions of the financials. So the financial statements are really set up the same as in the past. There are no new accounting standards that were required to be adopted that affected the IDA. So they are pretty much status quo from last year, other than the change in the activity that happened during the year. So pages 1 through 3 are the independent auditor's report. So this is our first opinion of the financial statements of our Western company. It says the financial statements are management's. Our responsibility is to audit them. The first 2 paragraphs, it says we've audited these financial statements, and in our opinion, the accompanying financial statements present fairly. So that's a clean, unmodified opinion, the highest opinion we give and what the IDA has received. The report further goes on to talk about management's responsibility, our responsibility as your auditor, and then talks about some of the supplementary information that's in the financials. Then after the opinion on page 4 starts the management's discussion and analysis. This goes from pages 4 through 12. And what this does is it gives some more narrative to what happened during the year. It allows management to add some description to what happened, the activities going on, maybe some of the things maybe that the numbers don't reflect, but what the activities the IDA has going on. So if you go to page 6, that starts the piece added in by management initiatives and activities and talks about all the activities that are going on in the year and where they are. The management discussion on analysis also presents some of the numbers comparatively summarized from last year. I will go over those numbers in this part, but just I'll skip to page 13, which starts the actual financial statements themselves. So page 13 is your statement of net position, is your balance sheet. This is a single year financial as of December 31, 23. You'll see that your total assets are about 3.8 million. That's down from last year. We sold that parcel in Glen Park, so that reduced our fixed assets. But we do have a new loan receivable relating to that sale. So we have a loan receivable of $356,000, and then further down in the deferred inflows, we have our unearned interest, which is again relating to that loan. And then we have our liabilities, a small amount of accounts payable, and those due to other governments. That and what's in there is described further in the footnotes. On page 19, you'll see more description on what those due to other governments are. It's really the same things that are in the county that have been in the past, just changing for the current year activity. And then our net position at the end of the year is just a little over 2 million. Most of that is in unrestricted. We have a small amount that's restricted for the USDA revolving loan fund. And then the net investment in capital assets is just our fixed assets less any liabilities. So, and how we got to the $2 million net position is on the next page. So this is our statement of activities. You'll see here we have our expenses. We have some revenues that directly offset expenses, and then we have some general revenues. So our expenses for the year about 275,000. You'll see that we have some grant expenses, so the National Grid grant of 50,000, some revenues for that. And then the thing that looks a little odd on here is the loss on the sale of the land in general revenue. So it's a negative revenue. So when we sold the land, we had a loss on that land, and that's showing up here of the 399,000. And that's really what drove our decrease in that position. It's just the sale associated with that. So then after that, I'm going to jump to page 16. That starts the footnotes. And like I mentioned, there's no new accounting changes. So the footnotes here are really the same as they were in the past, just updated with the current year activity. They're just a couple pages long. Talk about the organization, tells you what the values are in each of the parks that you have. And you'll see that if you go to page 18, that our Glen Park land has a little bit left, but that's about it. $64,000. This is in the Florida Park and a few other ones. Then we have a new footnote on page 18 for the loan receivable. that shows the future payments that we are going to receive through 2027. And then after the footnotes, page 20 is our second opinion from Western Company. So because you're a governmental entity, we have to issue what we call a yellow book opinion. It's an opinion on the report on the internal controls over financial reporting and compliance. Here we have no significant deficiencies, no material weaknesses. The books and records are in great shape. Like I mentioned in the beginning, we're not proposing any significant journal entries, so we have no significant deficiencies, no material weaknesses here. And then after that, just required to be in the finance statements are the code of ethics and certification of stewardship. And then the other document is the schedule of investments, set up the same way as we saw in the CRC schedule of investments, where we have the first couple of pages are opinion. We have a clean opinion over the schedule of investments as well. Page 3 shows that we have no investments at the end of December. But the next page shows that we have about $2.1 million of money markets, but that's all current cash equivalents, so it brings us for investments to zero. We have our investment policy on the next page. And then here, because again, we have to issue that second yellow book opinion, we have no significant deficiencies or material weaknesses over the schedule of investments. So clean opinions on that still. And then all these items will roll up into the Paris report and be able to be finalized for that March 31st. Any questions on the audited statements? Any questions on the audit process that we have to go through or anything?
So I did notice, and I think it's a Joe question, 19, where we talk about the due to other governments. The remaining balance, where it talks about the 900,077 represents accounts payable to the county. We're aware that would be the land sales transactions, right? But where my question becomes is the MC3 fund. What was that one? What do we owe back to MC3 fund?
I think that's just representing the monies that are being held, right?
Okay.
Yes. And
Okay, so that's just the money that's being held there would come to us. We don't owe.
exactly.
That, okay.
No,
I just wanted to make sure we didn't owe MC3.
You have MC3 has owes you funds.
Perfect. Okay.
And Joe, you mentioned you have a patch going
And
forward.
I've got a path going forward on that. I reviewed it in general with Ken earlier this week. We'll have some resolutions for you at the next meeting. One of my corporate partners, Chris Sanderson, has worked through a process by which we'll dissolve MC3 and MCEC, and then money will drop down to the MCIDS.
So Joel, can you just do a quick, real brief overview on MC3, just because Ed's new on the board, I just want to make sure he's got. And I think even all of us could probably use a little bit of a reminder as we're starting to close this out.
I actually have a pretty detailed memo that I can come to the next meeting and walk you through it.
Okay.
But the idea there was MCEDC was actually, you know, they were like our original administrator, right? Back in the 80s. They created a couple of limited liability companies, including MC3, to do the CNB corporate headquarters project. And the whole idea there was to create cash flow so that there would be monies available to do subsequent economic development in other parts of the county. Essentially what happened there was that some parcels were purchased by MCEDC and then leased to CNB. And that cash flow was, again, intended to be used to create a fund to do economic development in Montgomery County. MCEDC ultimately went defunct, became inactive. There was a lot of political issues there in the early 90s, the mid 90s. So disagreements with the philosophy of that board, the philosophy of this board, the senior staff of that board, the senior staff of, well, the board of this, you know, this entity went different directions. But that money is continued to be paid, and we've collected it over time, and it's accrued. And the issue is, how do we get to it without creating any legal violations? And that's the path that I've outlined generally to Ken, and we'll have, like I said, resolution for your next meeting to create a mechanism to, in effect, bring back the life for this purpose of dissolving it, NCEDC, so that the money can then drop to you. And you'll say, how do we do that? Well, there is a path in their bylaws, there's a path in the certificate of incorporation, there's a path in the not-for-profit law. But one of the issues that we've been struggling with is that, given the length of time and the fact that query whether MCEDC is even in existence, right? Because it's been so long, they essentially stopped operating in the late 90s. We're going to, in effect, bring them back to life through action by the IDA, and in connection with, and you'll see this, any of you who have been on not-for-profit boards, you see this with the activities of those not-for-profits. If a not-for-profit is going to dissolve, it just can't dissolve on its own. There's a mechanism that involves the New York State Attorney General and also the local Supreme Court. So there will be a separate set of eyes looking at what we're doing, which will give both us as your counsel and you as the entity ultimately benefiting from the money, comfort that what has been done will hold up and not be challenged. So, and that's a two-step process that's outlined in the memo that I've done for Ken, and that we'll distribute to all of you. There's two steps in the process at which these state agencies look at the process. They look at how we started it, and they sign off at that point, and then they sign off at the end when we're all done. And again, as part of our due diligence, and also just wanting to make sure that there are no loose ends, we're going to reach out to a title company, see if there's any outstanding properties at MCEDC, because our firm, while we were involved with them in terms of structuring, we didn't represent them.
Yeah, they had the legal counsel from here that it says passed.
Exactly.
Yeah.
Legal counsel's passed, the accountants have passed, board directors have passed, staff has passed. So we'll engage in a title company to do a lien search, to do a real property tax search, to do a litigation search. We'll probably put something in the newspaper too, say, hey, any board members, any members out there, just to do, and that's going to help us with our application, if you will, to the AG and the Supreme Court to show that we've done all that we need to do to make sure that this is all taken care of. The goal obviously is to get the money to the IDA. We do have a path forward. It's been a little bit of a tortured history internally. I jokingly say that I've got this is the third corporate lawyer that I've had working on this. The first two left the firm, so it's almost like a kiss of death project. But as I've told Ken, and as I've told Chris, I'm retiring at the end of the year. I'm not going to leave before I get this done, because I don't want to leave this. So we've got a path, and you'll have more detail at the April meeting.
Just so you guys have and then, when we get this will obviously have an impact on this moving forward, our audit reports and our investments and things of that nature. Just to kind of have an overview of what that was well.
Yeah, thank you.
All right, so any other questions? Sorry, Amy, I know we got a little sidetracked. Any other questions on either on the audit itself or the financial and the investment report? If not, can we have a motion to accept the annual? We need to move this to the full board with a positive recommendation. Can we have a motion? I'll offer a second. Perfect. All in favor? Aye. Anyone opposed? Abstain? Carries. So same thing for our financial investment report. We have a motion to move to the full board with a positive recommendation. Thank you. Second?
I'll second.
Perfect. Did you get Ed in?
Yeah.
All right, sorry, I know I jumped off quick. All in favor? Aye.
Aye.
Anyone opposed? Good job. Anyone opposed? Abstain? I will just say, again, it's my spiel. I could save it for the full board, but we'll do it now. I had the opportunity this year to be here, actually to sign some checks today that Sheila and Ken were meeting with Amy and Mike. It's a massive amount of time. Sheila does do a fantastic job on this as well. Our faith in Weston Company is very high, and we much appreciate the partnership that we have with you. So thank you very much for everything you guys do for us. It's a very good partnership, but it was nice to see it that day in person. So, all right, can we get a motion to adjourn? Second?
A second.
All in favor? Aye. Anyone opposed? Abstain? We're adjourned.
Thank you.
Thank you. Good luck on the next one.
All right, thanks.